What's up folks? So I'm back again. This is I guess my second recording. This is my second time going at it today, February the 23rd 2024. So I'm just going to try to put together a my house is going wild back here, but I'm trying to put together a script for today. I've got some information, some data that I've tracked here just from the day's time, and so I can use that to see if I can maybe come up with a quick script for the day. So ES, so I've pretty much decided. At one time I was doing NQ. I was looking, I mean, anybody who's kind of followed the channel knows that I've kind of started with the penny stocks, and then I went to looking at the Qs, TQQQ, SQQQQ, looking at the Qs, NASDAQ, futures, then E-mini, so SPY, futures, and now I'm back to ES, just the SPY futures. That's pretty much all I'm going to focus on. So here we go. All right, let me put a little bit of music on. Hopefully it doesn't mess me up too much as I try to think and come up with some scripts and whatnot. Let's see. Yeah, don't even have. This bud doesn't even work. Ah, goodness. Nope. All right, so let's see what we've got. All right, so the development environment, this is the one that we were working on earlier, that you guys were kind of hanging out with me on. And so we're going to open up a new show me, and then we'll make it into a strategy. So this will just be ES 022324. We're going to do it on the 5-minute time frame. I've been doing a lot on, looking at the 15-second time frame, looking at the 15-tick time frame, 1-minute time frame, but 5-minute time frame. Some of the scripts I've done in the past have been more consistent as far as being able to find the bottoms, find some of the bottoms, the pullbacks on the 5-minute time frame. The reds are where you want to take short at. These greens and blues where you want to take longs at. So I should probably focus on taking these as entries. So I don't know. I haven't really made any strategies like this in a while, just kind of like basic strategies. Pretty much what I've been doing is looking at everything else that you can't see on the chart. So like the bid and the ask and the spread and tick data. I've been looking at everything. When you normally look at the charts, when you look at your charts, I'm looking at everything that you don't see. So I don't even know if I can divert and go back to just looking at the charts to see if I can figure out a script. Let's just try to come up with something for today. Today, I mean, it was in a bullish way, at least initially, starting over the 200 period moving average here, the red line. Moved above it. I think we made new highs, came back down, tested just under the 200 period moving average, under VWAP, and then now we're kind of in that descending trend, moving over into some type of triangulation. I don't know if it's going to drop from there or what, but again, we are at highs, so pull back, as one of my buddies would say, get that gas money and then continue on. So let me see here. Make sure we're good with everything. Yeah, hopefully there's nothing wrong with the audio. Okay. All right, so let's look for shorts. I don't look for shorts a lot, but let's look for shorts. So we're going to try to identify this area, and this area. This is right at 4 o'clock, so we probably wouldn't do much with this anyway. So let's see if we can find a script that'll catch these two and maybe even not so much on that one. All right, so obviously here we're over the 9-period moving average. We are, let's put a little bit more data into here. I'm going to copy this, and unfortunately I can't pull up the non-historical data such as the bid and the ask and the spread and the size contracts that come in, the sales or orders that come in. I can't pull any of that stuff, but we can use the tick count. Do I not get the tick count when? Is the tick count non-market data? Market data? I should be able to get the number of ticks. Maybe not. No, maybe not. Okay, well that's regular daytime data then. So let me go show you what I'm talking about. So on the 5-minute time frame, I won't have the tick data because I didn't pull it up on the 5-minute time frame. It's not a part of my chart for the 5-minute time frame, but maybe I will add that. Only thing is on the 5-minute time frame here, this is my higher time frame area. What I'll do oftentimes is I'll use this and I'll change it, right? So if I want to look at a higher time frame, 60 minutes or something like that, I don't change any one of these other ones, but this is the only chart that I will change. All right, so if I change this, then I lose that 5-minute tick data, right? So I'm gonna lose any of the data that requires live charts, such as all this data requires live charts and all this data requires live charts. If we go over to here, see the tick count here? This right here, this is the data that I was looking for over there. Okay, so this is the data that I was looking for. And it's different from volume, right? So this is volume up here, this is tick count. Volume is the number of shares of contracts traded. Ticks are the number of transactions performed. Whereas you can see they are fairly balanced. So when you have a high run in the contracts, you have a high run in the tick count. You have a high run in the contracts or shares, you have a high run in the tick count. Here, it's a little bit high run in the contracts, but it's a much higher run in the tick count. So every now and then you'll see anomalies like that, or you'll see, this one is a little bit higher. This is a little bit higher than this is, but they're pretty much mostly even. Here, you don't see much of a raise here, but you see more of a raise here. So this would be, I know like an Anna Cullen. Anna Cullen, she does a lot with volume profile and that kind of thing. She will say that you definitely want to look for the anomalies, right? And so that being said, as you come here and you have you got the high, then you got another high. But now instead of breaking it here, which you thought it might would have done because it had a lower low, a higher low, and you think that you're going for another higher high, you got this anomaly here. From there, it retraces back down. So I don't know. I don't know quite how to interpret it. Like I said, I'm still in the data collection phase. Matter of fact, I need to take a screenshot of this for my notes. And yeah. So this is the script that I created, I think just this morning. This one isn't terribly comprehensive. This absorb right here, this is just looking for a long bearish candle with volume over a certain amount. Long bearish candle with volume over a certain amount, and I think there's one more criteria. But you can see when the chart drops hard, you get this absorb. You got it here. It did try to push up. So here, if you had taken that, could have got, you know, definitely a scalp. Here, if you had taken that, you could have got a scalp. Here, if you had taken that, depending on your risk, you could have got a scalp. Here was no good. 1, no good. 2, no good. 3, you could have got a scalp. 4, you could have got a scalp. 5 is questionable. Could at least broke even. 6, no good. 7, no good. 8, no good. 9, no good. So with some filtering, something as simple as that might be lucrative. Now this is on the 15-second time frame, so keep that in mind. And I don't know what the criteria is that would make this work. So that might be something that I look at in the future. Been looking at it now. Do I see anything? Lower tick count there, lower volume there. The volume does start to increase when you get to the top. Volume does not really start to increase when you get to the top here. So that's interesting. This volume, this tick count and the volume here, as you start getting to the top of this this apex, I call it the alpha of the move, it starts increasing. I mean, such does this though, but this worked. So I could play with making a script on that, but I might try that a little bit later because that's going to take a little bit more time. Yeah, let me see if I can just do this basic one and then we'll come back to it. All right, so let's get out of the whole tick deal. We'll just use volume. Just using volume. Okay. All right, so one, like I said, we definitely got to say this over the 9-period moving average. We need to say this a bullish candle because that's what comes up to the top. The range is pretty decent, right? So even from the bottom of here to the top of here, the range is pretty decent. Matter of fact, we could catch this last one here. We could say that the range is also touching the 9-period moving average. This is going to be super exclusive. And again, you know, some of the people on one of the sites, they talk about overfitting and you know, having that hindsight bias. So that's exactly what we're doing. But again, that's part of what technical analysis is, just in general, is looking at hindsight and seeing what the patterns are, what makes sense, what makes something else work. So all we have to go off is hindsight with the market. That's, I mean, you know, that's all we have to go off of. Okay, all right, so we will say that it will be a bullish candle, and we'll say that the range will be greater than range 7, which just says that it's a candle longer than the other candles have been. And then anything with volume is low there, and under the 50 here moving at that volume is not. I wonder if we do at es.d, which is just the daily time frame. Yeah, see. So that takes out the after hours. Messes up our moving averages though. You can see that, especially when you have gaps like that. Yeah, so I don't think we should use that. We ought not get involved with that. All right, so we'll just go with those. We'll hit verify. We'll come over here. Show me. That is the ES02 23, 24. 5 minute. It's this guy. Okay. All right, so we have all these firing off. So now we need to not get these at the top because we're actually looking for a short. We're looking for the one that's a short. So that did not make that was not the highest high. It did not have a close above that first close. It was actually a close equal to that prior close. See, that prior close was 51.22.50. 122.50. Yep, it was an equal close. Interesting. Looking for the glimmer. I'm looking for the glimmer. It's got volume above all the volumes except for that 930. I guess this is my first candle of the morning. Right here. So other than the 930 candle, volume is greater than 1, 2, 3 candles before it. This volume is greater than 1, 2, 3 candles before it. So the candles leading up to it, volume is higher than all of them. I'm looking at the close and the open here. So the open is down here, the open is up here, the open is here. It does have a lower low. This one also has a lower low than at least the two before it. So it has a lower low, which indicates that it does have some downward pressure. It has a lower low, it's longer, and the volume is higher. Okay, so let's try that. So let's try ticks. It's greater than V6. Ticks is greater than ticks a bar ago, and ticks is greater than ticks 2 bars ago. And we also say that the low is lower than the bar ago. Low is less than the low of a bar ago. Okay. So now we got that. Let's do this. Who is this guy? Let's turn you off at the time being. Okay. All right. So we got we have this one lit up. Well, this one got 1, 2, 3, 4, 5, 6 lit up. This one is no good. This one is no good. This one is no good, and this one is no good. Well, this one shouldn't be firing because we said it needs to be a bull. So who is this guy? This is a whole other. This is a reversal one. This is a whole other script. Okay. Now we just have 3 that are out of place. Well, that one is under the 9-period moving average, and we said that it needed to be over the 9-period moving average, so that's an easy one to fix. We should have fixed that one anyway. So then we just have the one that's out of place, and it's technically not a bad location. This guy here, because it did run up, and from that, it was somebody else saw it as a signal to go down, because what happened after that, it had a whole downward move. So I would say that it would be valid for this one to fire off as a move down. We don't need it to be 100%. We just need it to be in the ballpark. All right, so we need to see that the open is over the SA9, the 9-period moving average. Okay. All right, so again, now we just have those two, so that's good. Now let's go back through the rest of these. So we can go ahead and turn off the after hours, because I'm not interested in those. And I want to make a function for that, because I always am making something for after hours. So let's do a new function. This will be a Boolean, and it'll be I'm gonna call it Eric's Market. And this will be a Boolean, so it'll return a true false. Okay, so what I want it to be is if time is greater than 0935 and time is less than 1550, then Eric's Market. Oh, am I going to have to define it first? I think so. Do I? In a function? I don't know. I don't know about that. Then Eric's Market, maybe, equals true, else Eric's. Well, we shouldn't have to do that. Okay. Time is greater than 935, so if it's not that first opening candle, but if it's the candle subsequent to that after 935 and the time is less than 1550, so we're not in the last 10 trading minutes of the day, we're prior to that, then Eric's Market is equal to true. So we're gonna verify that. All right, so false. Value was never assigned to user function. Eric's Market is an easy language reserved word. Okay, well, that's what I thought. I didn't have to declare it there. That's also what I thought, but it didn't show up. It was telling me that it was wrong. So now it's right. So now I can go back here and I could say Eric's Market. Okay, so now anything between, well, this is still firing. Who is this? Let's see, what else do I have on here? 01. I'm gonna remove that one. Move that one, that one. Move that. I have a lot of scripts, don't I? Yes, I do. Yes, I do. Okay, but I still think this guy belongs to this current script I'm working on. And it's at 8:30 in the morning, so it should not be. 02. Oh yeah, that is it. I didn't even put 02. I put 02, 3, 2, 4. All right. Times greater than 935 times less than 1550. to do this? I guess so. Yeah. Okay, so now after 9:30 we got that. All right, looks good to me. All right, so let's zoom out, back through, see if there are any other time points where this script just is terribly wrong, and it's like in here, terribly wrong. And let's see if we could add criteria to it that would exclude this. I can see two things wrong with this that aren't present in the other one right now. Is that the low is dipping way below the 9. There's a lot of congestion in here too. Looking at that descending trend line. And that's not really the place you necessarily want to be shorting at. Well, I mean, it's not a bad idea to short there at the trend line, but you got to be careful when you get that close to it for the break also. So again, maybe a valid one, this guy, but this guy, not so much. We'll say that the entire wick let's see, I think the other one wick below it too. But you see how this entire wick from the open to the low, from the open to the low, this entire wick, the 9 is through the wick, it's not through the body at all. And I don't remember what it was over here. Okay, I'm not sure this one even touched it, but this one did a similar thing. So we might just say that the wick of the candle has to be at like the bottom third. The 9-period moving average has to be like at the bottom third or less, or bottom quarter or less of the 9-period moving average. Let's see if there's anything else obvious. Well, it worked right here. This would have been a decent entry. Worked on that day. It worked on this day. That would have been a great entry for a. And then also, when we add that next condition, that the 9-period moving average has got to be at like the bottom quarter, bottom third of the 9. The 9 has to be at the bottom quarter, bottom third of the wick. That will still work there. This one's okay because it moves this nice little pullback here. I mean, it's the top of this move. This one here doesn't work though. But again, I think once we use this SA9, the 9 has to be at the bottom third, it'll get rid of this one. So let's go ahead and try that since it seems to be working out. All right, so we'll say that Um, let's say, so this is condition 7. So the 9-period moving average is between we can say the 9-period moving average is less than the 9-period moving average is less than the low of the candle plus %15 of the range, something like that. Times the range of the bottom wick. All right, we lost both of those. Well, let's try that 0.25%, quarter percent. Oh, it's a fifth or something. Let me make sure I have the right thing. Okay, the right idea here. Not the best entry. The best entry would have been up here instead of here, but that did lead to a pullback, so I'm okay with it. It would at least get a, as they say, a scalper's profit. Okay, that's perfect. That's perfectly at the top. I mean, that is the top. Perfect. This one, though, no go. I mean, that's not a strong uptrend. Good gracious. How can we not be a victim there? How can we not be a victim there? I don't know. I have to come back to that one. Well, that volume is like twice as high as the volume before, which I think that's fairly aggressive. So the wick would technically show interest at the bottom, but when it's really high like that, that bottom wick is not just interest and just kind of checking it out. It's actually confirming that rejection. There is resistance, there's opposition. So all these other volumes, they're fairly close to the volume that came before it. See this volume here? It's fairly close to this volume here. It's not twice as much as the volume prior. So alright, so we still have those two guys. Still have that one. Okay, let's see what the volume on that one look like. Yeah, well, we'll probably lose this one too, because I'm going to put that the volume can't be twice as high as the volume before it. And of course, this isn't at the very top. The other ones are nicely positioned. This one is also nicely positioned because there's a nice sell-off thereafter, but I don't see any other way. Let's see. This is over the 50. That's over the 6. And it's twice as much. All right, this is, ooh, the 6 period moving average is under the 50 period moving average. So the volume is slowing down, actually, which is interesting. Okay. All right, I don't know what it looked like on these other ones. This one here is similar. The 6 period moving average is under the 50, so we would lose that one as well. I really don't want to lose any. It's a bullish candle and it's half. This one is a bearish candle. Well, it's a doji. And it has a lower low than the candle before it. We'll call it a bearish candle, and it has half the volume. So we'll say that let's say condition 8 is that, and we're going to say that it's not condition 8. We're going to say condition 8 is ticks is greater than ticks of a bargo times 2, and ticks, and it's a bear. The candle before it was a bear, this candle of bargo, or the open of a bargo is equal to the close of a bargo, so a doji. All right, and so we need to say not condition 8. Bull. What? Here I go. All right, so this is what have I got? I done lost that last one. What's supposed to lose? Let's see. Ticks of a bargo. Ticks is greater than ticks of a bargo times 2. And candle of a bargo is a bullish candle, because we're actually thinking about the one that we saw in the past, right? So this one having a bearish candle, or yeah, we don't need this. So we don't want it to be a bullish candle. There we go. Okay, so that should work. right, so now we have that one. So now let's zoom out a little bit. Let's make this much larger, and we can see it easier. Green, that'll be default. We're gonna make the size like 6, and it'll stand out. One plot color, no. Let's just undo all this. We call plot plot 1, value 1, that green, that default 6. That. All right. So, I mean, that's huge though. I mean, we don't really need it that huge, but those are the candles to signify. And I mean, this is, let's put it at the high, just so you're not confused. Okay, so this is the top. This is the top. Very good. Come back over here. We got a top there. We got a top there. We got a top there. We got a top within a pullback. So scalper's profit, we'll take it. That's it. Okay. All right. This is going back 15 days. Let's go back 30 days or 20 days. 30 days. All right, so go back 30 days, start back around here. That one's not good. That is on the 29th. Missing a lot of things here too, so have to add some other scripts in here to help. Okay. That's the only one that we got additionally, and it doesn't seem to like it. So let's see what's going on here. All right, so just touch that SA9, the 9-period moving average, so that's fine. Here, I think this is the only one that we saw that even seems to traverse the 200-period moving average, which is at 49.50. The high is at 49.51. So, I mean, since we are looking to retrace, but I don't think any of the rest of them were over the 200-period moving average. Certainly, we don't want to be touching it. Okay, so between what? The 200-period moving average between the high and the close. Let's do that. We need to say not condition 9. SA 200 should not be between, where's the close and the high? Low and the high. There we go. Okay. All right. So we should have about 9 conditions here. Let's see. We're going to add every time we get in here and we're able to make a plot, we're going to add one to count, and then that way we can see how many we have. I think we have about 7 or 8. So count, and then we're going to verify that. Then we'll come back over here, open up the print log, and it's like 6. Why does it look like we're maybe printing something else? Shouldn't be printing anything else. Oh, we print max bars back. Hang on, guys. Okay. Charging per devices. All right, here we go. So anyway, we have the max bars back, and there's the count. So we have 6 and not 9. We just have 6. All right, let's see if we can put this into some type of. See if we can put this in some type of a strategy. Okay, so we can't print. We don't want to print to the screen. We don't want to plot. We don't need to count. We'll just get rid of all that. We can get rid of this. Verify there. And actually here, I want to get rid of that print function. Otherwise, we'll clutter our print log. That. Let's see. So this is going to be selling short. Question is, how much do we want to have as a risk? We can say we're going to risk. I don't know how many points is that. That is 3 points. So 3 points per say $150. We'll risk $150. Trying to make whatever this run is. $150. Trying to make 13 bars. We'll call it 10, 500. So we'll say 150 to 500. So we'll put 150, 500. Get rid of all this. It's just going to be extra computations that we don't need. All right, if we get it, we're going to sell. We're going to short this bar at the close. Stop loss should be at 150. Profit should be 1. Okay, so set stop. Actually, because the stop loss and take profit, yeah, we can do that. We just take all this out. Now we're going to add that. And we're going to optimize it. Just make sure the properties are set up. 200, yes. Slippage, we'll put that's $2. Commission, 75 cents. 5 contracts, sure. Now to optimize, we'll go between 75 and 300. Increments 50, 25. That'll be 12.5, which is 1 tick. 500, so we go up to 1,000. Go by 7.5. This is gonna take a while, so we'll let it run, and then we'll just see what we get. All right, so this is looking back. What did we say? 30 days. 30 days. We're looking at 30 days. So $4,000 does not seem like very much for 30 days. 4,000. That's it. It only took 6 trades too, though. So 6 trades, 5 contracts. That's not very much. All right, it didn't even take our trades here. What's going on? This curve looks terrible. How come it didn't take any trades? 216 was the last trade it took. It didn't even take the trade that... What is this doing? Oh, this is the other strategy that we had on here, isn't it? Yeah, this is this strategy. Let's just remove that. All right, I'll restart it. Okay, because that other one was working on, I don't know what it's working on. This is showing $0 of profit so far. It's looking good. I typically don't do shorts, so maybe I don't have the script right for shorts. Because I mean, here are our shorts right here. So obviously I don't have something right. Let's see. It took no trades. So if all these conditions are met, then begin. We want to sell short this bar at close. Does the stop loss not work for shorts? Is that what it is? Works fine for buys. I don't think they had this here before. Set stop contract. I think they've updated this to show you for futures and equities. They didn't have this here before. Talking about the big point value needs to be multiplied by the stop loss. Okay, gotcha. Stop loss would be $75 each contract held based on a big point value of 50. Set a stop at 150 from price through the resulting stop would be $75 each contract held based on 150 times 50. Okay. Set stop points, set stop contracts, set stop loss. Be 75, yeah, so we're looking at the dollar amount. I didn't realize there was something called big point value. Okay, good to know. Yeah, good to know. Set stop loss points. Okay, so I can put the points in and have it multiplied by the big point value. Okay, good. So I just learned something new. All right, but either way, I have that in my script. And there should be no reason that shorting is a problem. All these conditions, then yeah, begin to sell short. I'll tell you what, I'm gonna buy, and then we're gonna see if it buys. Yep, See, it bought, right? So there shouldn't be any reason why it can't short. Because you want to sell. Oh, it's not just sell. Sell is you buy and then you sell. Long and then sell. When you short, you don't sell, you sell short. And then you buy to cover. Gotcha. Sell short. Yeah, learn something new today. Learn something new today. We're going to keep learning. We're going to keep learning. There we go. We're going to keep learning. All right. Now, there's our profit. Now it's not $0. We had 10,000. Come on, keep going. 11,000, 12,000. All right. That's better. 13,000, 14,000, 15,000. Risking $75 to make 800? Dang. Okay. Well, we're gonna have to run it with a walk forward optimizer as well, because we just don't know. I mean, because these are gonna optimize it to the very last drop that it can get. So let's see what that curve looks like. Curve looks darn good. I mean, 1 trade, 2, 3, 4. We got one that took a L. Well, one that took a small L, 2 that took another small L, and then all the rest of them were, straight up. So that's cool. So what is that? 2 to 4. Is that 66% profitability or something like that? Yeah, 66% profitability. Made $15,000 over a 1 month period, 30 days, 1 month period. $16,000 in 1 month with 5 contracts, 6 trades. I mean, it sounds good. And that's shorting. That's just one side of the market that's shorting. But it did actually hold it for quite a while though, so. Okay, so I'm gonna have to save this, but what I'm gonna do now is I'm gonna rerun this and then run it through the performance optimizer, through the walk forward optimizer. All right, so this is how you do that. You go to strategies, you go here to your study, you go to customize, and then you go back to optimize. You use those same values. That's fine. Same values. It's fine. You're going to hit OK, and then instead of standard, you're going to go to walk forward. You're going to name this bad boy. It should already give you the ticker, and what I typically like to do is put the name of the study. So it's just ES02230224 short 5 minute. And you can save the results of 5 if you want to. I've figured out that you don't have to do that. You do at least want 1,000 tests when you're doing the walk forward optimizer. But so now it's going to redo it, and then we're going to go to walk forward optimizer, and then it'll give us some other data. Now I don't know why it's saying 0 now. I really don't. Unless I didn't optimize. Did tell something to optimize. Okay. So we're gonna go to apps, walk forward optimizer, and then we're gonna go to the drop down, and then we're gonna click what is that? ES 5 minute, short 5 minute, that right there. Then click walk forward analysis, start single walk forward analysis, and then it'll give you some fail pass kind of things. I don't know. It's hard to pass all these. So this one failed this time. A lot of times with some of my other scripts, this one fails. The rest of them pass, but this one fails. So I'm pretty pleased that this one passed. So with this one failing, I don't know. I don't know if that's something we can improve or do something about. But let's see what the results said. Results said that optimally you want to use 75 and 752 as your risk to reward, which is not bad. I mean, risking $75 to make 752, that's a 1 to 10 risk to reward. You know, so if I see that, if I see this indicator come up, I'm probably, even if I don't look to go for a 1 to 10, I'm probably going to look for, or drop down to the 1 minute or the 3 minute time frame, something like that, and look for some shorts along this 1 to 10 risk to reward area. That's probably what I'll do. But again, this only happens one in, 6 times out of 30 days. But if you could capture that 6 times out of 30 days, I mean, in 30 days, you better made how much money? I think 15,000 for the month. I mean, or just let your algorithm run. Just let your algorithm run and let it take the trades for you. You step away. You do whatever it is that you want to do. You let your algorithm take the trades. Instead of making it a 1 to 10, set it as a 1 to 8 so you get out sooner. I don't know. And then just live your life, All right, so 75 and 752. So we come back here and then we put go back to strategies, double click it. So here I'm going to put 75 and then what is it, 752. Hit OK. Okay, that puts our parameters here, and we can close that, and then you can see now now it adjusts, right? So now it's saying, okay, you enter here, you exit here, you enter here, you exit here. You know what? One other thing that I didn't do though, that I do need to do, and so it'll probably change all of this. I'm not going to be in the habit of holding things overnight. I don't want to do the overnight margin. I don't want to do any of that. So at the end of the day, I need to sell. So if time equals 1555, then sell, then buy to cover. End of day. Boom. So you hit that. Time equals 1555. Then buy to cover, end of day. This bar at close. Bam. Okay, so at 1555, it is that okay? This is a 16. This is a 15. This is 1600 bar here. So this would have been at the very end of the day. So you want to close here, right? Not getting you the profit that you want. You could have took better profit down there. So that's why I say that's when you do the optimization and that kind of thing, and it probably would have taken you out down here. So like I said, I could rerun that optimization, but for the meantime, if I just made that change there, we go from 66%, still 66%. Performance graph looks about the same. So all these other trades were good. We weren't trying to hold them overnight anyway. And then for this one, we just lost a little bit off the end of the day. So I'm super happy with that. Man, $12,000. Yeah, that's I'm going to have to do some soul searching on this, because I just put this on my ES account and then just let it do what it wants to do. Not touch a thing, and just not touch a thing. So I'm gonna come back in a few minutes. I'm gonna come back and save all this data and transfer it onto my Excel spreadsheet, and then this is a good script. This is a good script. So guys, I hope you got something out of this, whether it be the logic, whether it be working through the process, whether you learn how to apply your show me to your strategy, or optimize, or walk forward optimize, whatever. Hope you got something. But for now, I'm out. I'm Eric. Peace.